9:02 a.m. We'll call the ESS Finance meeting to order. First up is August 7th, 2025 summary of subcommittee action for our approval. Do I have a motion to approve or any questions, comments?
This is Sherry. I move to approve.
Thanks, Sherry. I have a first from Sherry. Do I have a second?
This is O'Brien. I can second it.
Thank you, Susan. I have a first and a second. Any additional discussion? All those in favor signify by saying aye.
Aye.
Aye. Opposed, nay. Motion carries. Next up are the financial reports, the accounts receivable update.
We're waiting for a check for $12 from Warren County. That was an extra distribution of point of sale. And Samantha, we haven't received that check yet, have we?
No, we have not.
Okay, I'll follow up with Jordan again today. You guys, we have Stacy on the phone now, so we're good. But Mel, I think you can keep going.
Okay, accounts payable for the month of October. I have a few items highlighted here. During the month of October, we did have 3 payrolls. And this is our first month with Connectify. So you'll see those 3 items listed here. And then also I just have the Tyler invoice highlighted because the packet that I sent out to you on Monday did not include this. The invoice came in late. Credit card charges for the month of October. These are all normal charges that you see month to month, all except the Canva invoice. This is an annual expense for Kristen for the marketing and communications application. I'd be happy to answer any questions.
Samantha, I wonder if you might just expand your Zoom just a little bit to make some of that easier to read. Thank you.
Right, thank you, Samantha. Does anyone have any questions? If not, I would entertain a motion to approve. Looks like Stacy moved. Do I have a second? Oh, Amy seconded. So I have a first and second. Any additional discussion? All those in favor signify by saying aye.
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 Opposed, nay. Motion carries. Next up is the November Fund 255 reimbursement invoice for approval.
November Fund 255 invoice covers the 3 payroll periods in the month of October. The total for the invoice is $47,849.49. As you can see, our payroll is not completely covered by the Fund 255 reimbursement invoice. I'd ask for your acceptance and approval to submit this to the State Treasurer's Office later today.
Thank you, Samantha. Anyone have any questions? Otherwise, I would look for a motion to approve. Amy made that motion. Do I have a second?
This is Sherry. I can second it.
I have a first by Amy and a second by Sherry. Any additional discussion? All those in favor signify by saying aye.
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 Opposed, nay. Motion carries. Next up are the September quarterly and 2025 year-to-date financial report.
The bankers Okay. The Bankers Trust account, checking account, opened with a beginning balance of $0 and ended with a balance of $0. Sorry, this is really long. The account was successfully reconciled. The money market sweep account began with a balance of $1,266,368.26 and ended with a balance of $1,236,032.98. The interest rate here you will see dropped a little bit from what we've been seeing due to the interest rate cut in September, late September. This is also expected to decrease slightly with the interest rate cut that was done in October for next month's reconciliation. Total interest earned during the month was $3,189.58. And the reconciliation for the money market sweep account. And the drawdown account with a cleared balance of $100,073.40. Profit and loss for September, budgeted income came in at $162,652.41. Against budgeted expenses of $93,064.23 for a net income for the month of September of $69,588.18. Again, budgeted income of $162,652.41 with revolving income of $3,521,995 with a gross profit for the month of September of $3,684,647.41. Main difference between the P&L that I showed you previously and the P&L that I'm showing you now is these reserve expenses. The back file reserve came in for the month of $241.35, and then also the depreciation expense of $22,604.75. With revolving expenses at $3,531,148.55, with total expenses of $3,647,058.88, with a total net income for the month of $37,588.53. 2024 to 2025 comparison for the month of September. Last year we had not started the money market sweep account yet, so the difference here, you will start seeing a good comparison kind of in November, but mostly in December for the money market interest. Bad payment fees. We did have 3 last year. We only had 1 in the month of September for 2025. And then also Professional Solutions did increase those bad payment fees to $5 extra later in 2024. So that's why it's only $90 for the 3 from last year. Point of sale fee income and ESUB fee income did raise approximately $20,000 altogether from the year before. And with those extra sales that we've been seeing, Fund 255 reimbursement also increased approximately $2,000, with a total gross profit increase of approximately 15.9% or $22,301.65. Government relations, this isn't actually an increase. I believe we were just billed late for September no, I'm sorry. Last year, we decided to move it up to $5,000 for the last few months of 2024. So that's what that extra $2,500 is for Rafferty Group. Oasis Human Resources fees. Normally, it would be around $1,000 for the month of September. However, we were getting credits for the last couple invoices that we were with the company. So that's why we have such a decrease for 2025. ESS meetings, $131 for the month of September. Bank analysis fees. So we had not started the money market account yet in September 2024. So we were getting a savers credit of approximately 0.025%. And after starting the money market fee, we do not get that credit anymore. We get the interest, which is higher. So our bank fees are higher by around $600, but we also made an extra $3,000 in interest. Gateway transaction fees are a little bit higher, not by much, but with those extra sales, the fees do increase. IRL annual conference for the deputies conference, we did not sponsor that in 2025, so that'd be the increase there. Promotional expenses. Last year, we did have it approved by both committees to buy IRL swag. In 2025, we did not need to do that. The policy coordinator, this position is vacant during 2025, the last part of 2025. However, in 2024, this position was a full-time position. The development team. Earlier in 2025, we did lose our past technical lead. The technical support and development position was promoted to the technical lead. However, she has been on disability for some of September. Technical consulting would be for Kelly Wallace to work on the migration. Local maintenance expense. In 2024, we were billing for the entire fiscal year. This year, we're only billing for the last 6 months of 2025, and we did have some late invoices come in September. Total expenses are down 27.9% compared to the previous year, around $35,922, with total net income increasing 512% with an increase of $58,223.89. Third quarter 2025 budgeted income of $489,056 against budgeted expenses of $488,405.08 with a net budgeted income of $650.92. Third quarter P&L, again, budgeted income at $489,056 with revolving income at $10,879,713.17 with a gross profit of $11,368,769.17. The main difference between the P&L I just showed you and this P&L is the reserve expenses with back file redaction expenses of $1,882.68. And then you'll see the negative $11,476.08 here. This is from moving the DB2 expense out of reserve expenses and back to the budgeted P&L. And then depreciation expense of $67,814.25. With revolving expenses coming in at $10,892,251.21, with total expenses at $11,486,713.17. $438,877.14, with a total net income for the quarter of negative $70,107.97. Year-to-date budgeted P&L, budgeted income came in at $1,518,251.24. Against budgeted expenses of $1,254,490.76, with total budgeted net income of $263,760.48. Profit and loss for the year to date, money market interest income through September has been $17,767.49. Bad payment fees did come in at $455. This is just a reminder that this is what we are being charged from Professional Solution. We're just passing that cost when we're charged back to the customer. Service fees, $868,891.40. Fund 255 reimbursement, $387,679.18. And then the local service provider maintenance fees, $90,113.18. And just a reminder, this is only for the last 6 months of 2025. With budgeted income at $1,518,251.24. Revolving income for the year-to-date P&L came in at $30,617,765.57, with total gross profit for the year-to-date of $32,136,016.81. Bank account analysis fee, $11,927.07. Again, this is without the savings credit, but replaced with the money market interest. The AccuSoft Prism and the DB2, these are normal expenses that you see every year. Last year, we did not move the DB2 back to the budgeted P&L. However, the AccuSoft we did in 2024, it was just later in the year. So this is just showing that we were able to move those back to the budgeted P&L earlier this year. With budgeted expenses at $1,254,490.76. Backfile redaction charges for the year are so far $18,174.90. Depreciation expense, $203,442.76, with total revolving expenses at $30,621,992.69, with total expenses at $32,098,101.11, with total net income for the year of $37,915.70. 2024 to 2025 comparison, total budgeted income is up 9.6%, approximately $132,453. And then budgeted expenses are down for 2025 around 4.6%, which is around $60,928. With a total net income of an increase of 274% over 2024 of a total of $193,381.51. Balance sheet for September. The BT settlement account had $711,700.88. Just a reminder, this is not what is actually in that account. That account is always brought down to zero at the end of the day. The total here is the total of unreconciled transactions in the ESS accounting software. All of our money actually lives in this money market sweep account, which has a total as of September 30th of $1,236,032.98, with total assets and liabilities equaling $2,838,542.93. Journal entries for the month of September. The majority of these are the journal entries from me moving money in and out of the sweep and settlement account every business day. And then the depreciation expense here is also shown. The credit card account opened with a beginning balance of $2,751.14, with an ending balance of $1,918.20. And the reconciliation for the credit card account. Fund 255 opened with a beginning balance of $172,314.02, with an ending balance of $173,884.77. You will see the interest here is higher than it normally is. If you remember, in the month of August, the state treasurer had some swapping of jobs and they did not get the account reconciled in time. So there was actually zero interest in August. So this is August and September's interest together, with total receipts of $47,849.49, which does match the invoice previously approved to send to the state treasurer's office. And the reconciliation for the Fund 255 account. And the profit and loss for September, with a net income of $1,570.75. And the year-to-date Fund 255 profit and loss, with a net income of $9,597.88. And the balance sheet for September, with total assets and liabilities equaling $173,884.77. I'd be happy to answer any questions on any of the reports.
Thanks, Samantha. That was a lot of great information. Does anyone have any questions? Sherry Jones also, great explanations.
This is Stacy. Can you hear me?
Yes.
Would it be appropriate now to talk about the Lynn County loss of revenue? If you could like ballpark how much revenue we actually did bring in from the Lynn County pilot project. I know it kind of dabbled a little bit in, we started in 2024, the end of 24. I didn't know if that was appropriate time to ask about that.
Phil, did you want to talk about Lynn County now, or did you have a separate discussion for that?
Sorry, I would just suggest that maybe we bring that up when we talk about the budget. That might be the most appropriate thing to do, just to explain, why we did certain things with the budget. So I would ask to defer that until we get there, if that's okay with you.
Okay.
Then I will go ahead and make a motion for the approval of all the reports you just had been presenting, Samantha. Thank you.
You bet.
I would move to approve.
Stacy motioned, so Mel, do you want to be second?
Oh, yes. Yes, I couldn't hear I didn't know if she called for a vote. Yes, I will second. So first by Stacy, and I will second. Any additional discussion? All those in favor signify by saying aye.
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 Opposed, nay. Motion carries. So there were additional comments too. I just wanted, Amy had said, thanks for all your work. Thank you, Samantha, from Susan. So we'll move along to the ESS financial and strategic review.
This is Phil. I would just, in summary, say that the financials have been more predictable in the recent period, primarily because that revenue has been sustained, primarily e-submission activity. And you can see that in the month of October, we again, I think this is the second time this year that revenue has exceeded income as compared to calendar year 2021. The high point, just for really historical reference, was in 2020, kind of the effects of the pandemic, and then changes in the economy, occurring after that. But in spite of uncertainty in the economy, there are still transactions happening in Iowa, and they have been very active. So we have not put a lot of effort to find new ways to spend money. Most of that has been accumulated, as you can see from the financial reports that you just reviewed. And one of the agenda items that is going to be discussed in just a little bit is a bit of a rebalancing of the reserve accounts. But even with that, the cash flow has been very good. So I think it kind of sets the stage for where do we want to go in 2026, and I think you'll see that reflected in the budget recommendations as well. So from a strategic perspective, I would just say that we're still, we're not getting too exuberant. We're looking at the averages. We're trying to maybe look into the crystal ball a little bit to see what's going to happen. We've got a kind of a federal outlook that isn't really sure what should be done with the economy, because we've got kind of a softening job market, and inflation isn't totally under control yet either, and that puts the federal government in a little bit more difficult position. But in spite of all of the uncertainty, we're still seeing transactional activity. And the numbers in just these first few days of November are holding up. So you can be overly optimistic, or you can be unnecessarily pessimistic. And I think what we're going to be trying to do is sort of strike the balance. And when we talk about the budget in a few minutes, I hope what you see is that, we really are not going out of the norm in terms of our standard expenses. We're keeping most of the operational activity about where it has been, not haven't seen big increases there. And there are two exceptions to that in the budget that you'll see, and that is you're going to be having a new administrative director or project manager or whatever you want to call them. And, that's not going to be a total jump, because, I am going to be leaving. But at the same time, we are anticipating that there may be some higher costs associated with that position. So that will have an effect. And then the fact that we've gone pretty much a whole calendar year, without filling our third developer position, because we just wanted to be sure that the revenue would be in place to support that. We didn't want to have to bounce around or undo any decisions. And because of that sort of steady, sustained activity, we're in a situation where I think with confidence that we can fill that third position. And I do want to just repeat again, we need more than just one more developer. But we certainly need to at least have our complement of 3 developers fully staffed. And so as we get into 26, that's probably going to be the biggest comparative expenditure increase. And so from a strategic perspective, we think the expense side is going to be reasonably under control, but we've got maybe a couple of areas where we're going to thoughtfully increase expenses. And then we're not getting too exuberant about revenue, but we are recognizing that we are getting more revenue, and that will be reflected in the budget numbers as well. So that's not the Wall Street analysis, but that's sort of the way we are looking at things. And I think it does provide the backdrop of, some of the things you'll be asked to look at in the budget in just a few minutes. That's all I have. I would be ready for the discussion about the HR transition update. And maybe I would ask just Samantha if you could cover the basics of the content of the memo. I might add a little bit of color commentary at the end.
Sure. So we're pretty much done with the conversion over to Connectify HR. I believe that we're all very happy with the new company. The only thing left is the 401k retirement plan. That will be mostly covered in the coordinating meeting next Thursday. Just to approve the plan. Just a heads up, it is the exact same SPD as we had with Paychex in Transamerica. PTO balances. So upon the transition over to Connectify, we discovered a couple of employees that their PTO accrual was not correct. One we were able to correct immediately, and that kind of sparked the audit of everyone's PTO balances and accruals. Upon that audit, we discovered that one other employee had more PTO in their account than they had actually accrued. That has since been corrected. They will not be losing any PTO that they had accrued. We just kind of corrected the balance going forward in Connectify. And then the unemployment insurance account, with the transition over to Connectify, we realized that Paychex had missed a couple payments to the Iowa Workforce Development. We just found out yesterday that Paychex had finished their audit of the account and they have agreed to pay. That is not in the memo. We'll give you an update when we see that payment actually made in the account. Is back where it should be. Bill, did you want to comment on anything?
My comments would be, first of all, I want to compliment Samantha because, when you're making a transition, you have to change from one service provider to the other. And then one of the things that the new provider asked is, well, tell me what the beginning PTO balance is, what it should be for everybody. And that required an examination to make sure that we were giving them the right numbers. And, to Samantha's credit, I would say it was a very thorough review. And that's what led to the discovery that the balance was not correct. In the primary case, what happened is a member of the team, this actually was a couple of years ago when the error began to accumulate, and that is that a member of the team had moved from a full-time position to a part-time position. And that resulted in sort of losing track of what the balance was, and just essentially what happened would be they would take PTO, but it wouldn't be deducted from their accrued balance. So we have had a chance to visit with the employees and make sure that we're handling things in a way that is not going to do any harm. And they get things back on track to where it should be. This is also an important issue from the standpoint of the audit because, if we owe PTO to somebody, that's treated as, a liability within the context of the audit standards. So it is important that we have that correct. Then on the IWD side of things, that was discovered because when you move from one PEO to another, you literally have to go into our workforce development system to give permission to the new PEO to be able to access information on your behalf, and then to do the reporting and the payment of those unemployment amounts that are due. And when we were in the midst of making that transition, that's when we observed, hey, there's a balance there that shouldn't be. What's going on? And that led to discussions with Paychecks to get that resolved. And it's one of those things where, you know, Paychecks or any PEO charges you as you go forward with each payroll a certain amount for state unemployment responsibilities, and we have been paying that. So it was a bit of a concern that hadn't been done, but it does appear that we'll get it. We're getting that resolved. So I just want to compliment Samantha for kind of doing the legwork, particularly on the PTO issue, but also on the unemployment issue, to get those resolved. That's all I have on that.
Thank you, Phil. Thank you, Samantha. Appreciate those updates. Next, we have the Iowa Land Records Budget Review and Action, calendar year 2025 final budget amendment.
Okay. You're gonna have to put up with me on these, but I'm sure Samantha may have some things to talk about. The primary thing that you should be looking at is the memo that I believe is on beginning on page 172 of your packet. It's really divided into two segments. The very first part of it is about the budget amendment for 2025. And then there's a second part about 2026. In between those, we also have a separate memo concerning the balances of the reserve accounts, and really it would be appropriate just to go through those one by one. So I'm going to ask Samantha to display the spreadsheet for the budget amendment, and I will walk through that with you and highlight the salient parts. So the first thing is just to advise you of the normal conventions that we follow as we share the details with you about the budget, because you know, I know some people would do this differently, but we want to be very transparent about, you know, what's happening with the budget and the expenditures. And as we go through the calendar year, you know, you experience what the actual costs and revenues are, and then you make adjustments for it. So the first main adjustment is to adjust from budget to actual. And unless it's really something extraordinary, you know, mostly we treat this as just a factual transitional thing that we report on. And so the last time you seriously looked at this was at the August meeting. We did do a budget amendment at that time. And then since the August meeting, we have had experience with reconciling in July and August. And then we've now been through September. We just completed the financial reports due on that. And we've been through October, and we know what most of those expenditures are. So we can give you a clear picture of where things actually stand. So at the time that we put the amendment together, August was reconciled, but September had not been. Now you've done that, and we can move September into the reconciled account. And that's why that column for September is blue. It's because we hadn't completed the reconciliation yet, but they are the actual numbers that we experienced. Then in October, we're through October, we know the numbers, but you know, we have not taken them back through your process to report on the reconciliation, and that will occur at your December meeting. So you have kind of three sets of colors here: burnt orange, which has been moved from budget to actual; the blue, which indicates that we were sort of in between reconciliations, but the numbers really are close to, if not exactly, the actual numbers that we've experienced. Um, and then you have November and December. And so anything in the October, November, or December column that has no shading, that's basically a white background, is the same thing that you saw at the August meeting. No changes have been made. So what we're highlighting for you are the changes that we are recommending that be made in the end of year 2025 budget. The first one that I'll talk about is just the change in money market income. You may recall discussions from prior meetings that Banker Stress was increasing the interest rates that we were earning on that, and you can see those in the numbers for July, August, and September. Now the Fed has cut rates, and what we're expecting to see through the end of the calendar year is a little bit lower earning in that. So for the purposes of projecting income, I'm recommending that we reduce that projected income from what it was before, and not taking into account as fully the increase in interest rate, and projecting an income of $2,500 a month. Certainly more than we would have earned prior to instituting the sweep account, but being a little bit conservative on projections, and hopefully we'll have, achieve income higher than $2,500, but we think it's prudent to not be too optimistic with that. The next one that's highlighted in gray is what's referred to as the OD service fee. On the screen, you can't quite see the label, but if you were to go to the left, you would see that this is the OD service fee. And this is getting to the point that Stacy was asking about, and that is, why have we gone from, even though there's a lot of income, why have we gone from some income to zero income in the OD service fee? The OD service fee stands for on-demand service fee. It's a special payment function that we were to create with our existing financial payment infrastructure to allow a website to accept a transaction and then on demand charge the customer for that. And we did that in service to Lynn County for their online registration system. As we were looking at the financials, getting ready for this meeting, one of the things we observed is, we didn't see any transactions in September, and we didn't see any transactions in October. And with a little bit of just poking around, we said, oh, Lynn County is not using their internal payment registration system. They're now using a third-party vendor's registration renewal system, which is not connected to our payment system. So we have had some communication back and forth, but I think Lynn County might describe this as sort of an analysis period or an experiment. From our point of view, it looks pretty solid that they have made the transition to the vendor, and so I really cannot estimate any income from that going forward. They have indicated, that is, Lynn County has indicated that they might change it back at some point. Lynn County has indicated that if they develop future applications that need on-demand services, that we can reconnect again. And we certainly are open to that. In a communication that I sent to Teresa Sackett at Lynn County, who's our primary point of contact on this, and we just said, the agreement that we had does not require, exclusive use of our system, and either party can choose to do something different. It's a fairly easy thing for either party to have, and that's something that they chose to do. So I don't want to say anything that would be interpreted as negative. It's a choice that they made. And so I just don't have any basis for projecting income on that. So that's why those things are zeroed out. Otherwise, on the income side, we're keeping relatively modest projections for e-submission income, relatively modest projections for income from base recording activity, so with that, from what we projected in August to what we're now projecting, we're about $64,000 above our August projections, and that's where we anticipate we'll be on the income side going through the end of the year. Then I'm going to go down to the expense side and really have no changes in the administrative projected expenditures or office operations. What you will see is, for example, if you look at the item in the lower part of the screen that is highlighted as $2,000, as I mentioned in the memo, we're looking at doing some end-of-year acquisitions. The administrative team, not including me, but the 4 people in the office, it's been a few years since their devices have been updated. This seems to be a good time to do that. So we have put roughly about $2,000 per device into the budget for that refresh to happen. I don't think we're actually going to end up spending that amount. It's going to be a little bit less than that, but we do have that in the budget. And so if you look at that line item related to that appears for Kristen, and then if you go down to the customer support team, we have 4,000 there, and that would be cover both Lisa and Corey. And then go down just a little bit further, you can see that we're doing the same thing for Samantha. So that's what those changes are. Then if we go back up to the customer support account manager, the $8,400 number is primarily associated with the benefit election. And so we have to take into account what the employee actually chooses, and that is the primary driver of why that number is going up. So there's not any new program activity or overtime or anything like that. It just has to do with the benefit election. And then I did make an adjustment in the projected cost of Corey's position, and that was just simply a result of looking at what are the numbers in the new PEO system. We looked at the first 3 payrolls and did some calculation, and this seemed to be a more accurate number than what we were doing before. So, and it's not a big change, it's just an adjustment. Okay, continuing on, and then I'll stop and answer any questions. If you look in the December column for the development team under the label technical support and development, we are projecting that we might be able to fill this position as soon as December. We have some work to do to get there, but if we did fill that position, our projected cost for the position would be about $9,700. The next one down relating to technical consulting, you may recall that at the basically roughly May, July time period, we did offer and entered into an agreement with Kelly Wallace, our former technical lead, to help us with some technical things, technical development work that needed to be done. We knew we were going to be a little bit short-handed, and the specific thing that really has been focusing on is the transition of our Linux software operating system platform from one type of Linux system to another, and that's what he's continued to focus on. We originally projected much higher numbers and had hopes that you would be able to dedicate more time to it than it actually has. So the $3,800 is a reduction from what we were originally projecting. I gotta be honest and say we're probably going to spend less than that, but we're keeping him active to continue to help with that. This is not a permanent arrangement. You're going to see in the 2026 budget that we are suggesting that we extend that work for an additional 3 months, but I really don't expect it to go beyond that. So look for that when we get to that budget piece. Going on down to the line for GB2, our database software, this is just a change. We had originally projected the expenditure to be moved into the budget in October. That actually happened in August, and so we're just taking it out of the October numbers. Just a couple of things left for the 2025 budget adjustment. We've added $5,000 to the budget for the device for the new software developers. So we earlier in the year upgraded or refreshed the devices for Muna and Nancy. We hire a third person back to the team. That device that was previously being used also needs to be refreshed as well. Then we have one local service provider that has not sent their invoice in yet for the second half of 2025. We had it in a prior month, but it just hasn't arrived yet. So we moved that into November, and we have reminded them that they deserve payment for the services under the agreement. And so we're hoping that they get that done. Otherwise, in terms of our projections, for our gateway transaction fees, bank service charges, and so on, we really don't have any further adjustments to be made. So where that puts us is that in the budget amendment that you adopted in August, we projected net budgeted income of $231,118. As things stand right now, we're projecting $316,323, which is an $85,000 increase in income. That I think you'll see when we get to the next topic that we're essentially doing two things. We're moving some things into the reserve, more into the reserve account. And the other thing is we're just recognizing that as our transactional activity goes up, so do our cash flow needs for maintaining payments to the local counties. So that is the summary of the amendment to 2025. I'd be happy to answer any questions.
Thank you, Phil. That was a lot of information. Does anyone have any questions about the things that Phil went over? Stacy, it's now a time. Do you have anything else you wanted to ask? Okay, no questions.
So you may choose to defer and make several motions all in one, or you can do these separately. It certainly would be appropriate if anybody made a motion to authorize the amendment for 2025, or if you want to wait, we can do that too. It's up to you.
Oh, if anyone has feelings one way or another. How about we defer this and move on to the next ones, then we can vote on it after we approve the others? Is that
Very
okay?
good. Yep,
Okay, thank you.
absolutely. That's totally okay. So the next thing I would want to bring your attention to before we get to the 2026 budget is the memorandum relating to the reserve funds. So if you see in the memo that as of October 31st, we have existing balances in the unrestricted reserve, the software development and equipment maintenance reserve, the redaction reserve, and the restricted operating reserve. The only money we've really been spending recently is just a monthly redaction reserve expenditure. That said, we are going to be making some suggestions on the use of reserve funds, particularly from the software development and equipment maintenance reserve. And because we have had fairly solid net income, we are recommending a substantial increase in that to $450,000. The increase to the redaction reserve basically corresponds with the amount of money we've used recently this past year, from $39,945 up to a round number of $50,000. Then we're not going further than that, although we could, I think. But I wanted to share with you a report that I had asked Samantha to prepare just to show our cash flow of our weekly distributions during year to date, January through October. We have a couple of instances where we needed to have sufficient funds to be able to distribute over $1 million. We have a number of months where we are in that $700,000-800,000 and a few $900,000 ranges. And I guess I just wanted to use this as an opportunity to say, even though it might look like, wow, we're hoarding money, we're trying to build up a big war chest, and that's just simply not the case. The reality is that we have cash flow requirements, and when we give credit for an ACH payment, we don't actually get the money in the bank until a few days later. And so when distributions need to be made, counties deserve to receive their money on a timely fashion. And that is a driving force behind maintaining those cash balances. And I think the original suggestion a couple of years ago to see if we could do something to earn a little bit more interest, I think was valid. And I think the use of the sweep account to kind of make sure that cash flow is there, but maybe earning a little bit more interest, I think has been a pretty good marriage. So that's where we are at. And all of this ends up going to the ESS committee for final approval. But your endorsement, your review of this is important as well. And so the recommendation is to make those two adjustments in the reserve balances for the redaction reserve and the software development and equipment maintenance reserve. I'd be happy to answer any other questions.
Thank you, Phil and Samantha, for generating that extra report. Do we have any questions? Hearing none. Need approval.
You can do this together if you want as well.
Okay. Okay.
It's up to you.
Yeah, you can move along then.
Okay. So just if you're needing some words to cover some of the highlights, you might want to move back to page 173 if you're following along. And then I'm going to be primarily speaking from the actual recommended budget. And I will try not to go through every single line, but I will try to cover the main points. So the first main part of the proposed budget for 2026 is, again, you look at what your experience was in the previous year or the current year, 2025, and you look to that to make some adjustments and make your best prediction about what things may happen. You notice that the money market interest income reduced the projection for that to $2,300 at the beginning of the fiscal year or the calendar year. I retained that amount, although I am looking ahead to the summer period and thinking that if things were right, we would see a bit of an increase in that going forward. So not necessarily scientific, but certainly certainly somewhat conservative on the front end and maybe a little bit more optimistic on the back end. The projected income for point of sale services actually is a little bit lower than 2025, primarily because, you know, we did see a lot of seasonal activity from the sort of natural resource perspective, and not wanting to be overly optimistic there. So the proposed budget, you know, would be $120,000 compared to, you know, the projected actual earnings that we expect to get as 2025 comes into an end. The projection was $151,000. So we're looking for a little bit of a downward trend in that category. But pardon me for just a second. Okay, then moving forward to the e-submission activity. You know, as we look ahead to the end of this year, we're looking at, you know, $1,112,000 in projected income, kind of looking at keeping status quo. I did not try to make adjustments month to month to kind of follow the pattern. The estimate is based on a straight line average. So the projected income is basically just a little bit more than what we actually earned this year. It does rely on an assumption that, you know, economic activity will be sustained. It remains to be seen as to whether that will happen. The projection for the $1 fee through the regular recording activity. We have seen regular recording activity go up this year, and we're not looking for that to diminish significantly. And that, again, using a straight line average, estimating about an income of about $44,000 a month for total proposed income from that source at $528,000. Moving on down. And this is about as real a number as there is in the revenue side of things, is that we have a pretty good fix on what the cost of the local service provider maintenance expenses are going to be. We know what it was in 25. We know that the Social Security Administration, you know, has announced their increase, and we can calculate that number. So then the only question is, well, you know, how much can we assign to give credit back to the county to make that a little bit less painful? And, you know, because we did this only for the half a year at the end of 2025, now we need to make this a full year. So at the end of the year in 2025, we had a credit amount funded at about $52,000. So this is going to be for the full year. So we know that we need to at least double the amount of credit for this year. But instead of just stopping there, we wanted to go back to a level that was closer to what we had been doing in prior years and increase that overall credit amount to $140,000. So the effect of that is to reduce the amount of the invoices that would be sent to the counties for payment. The other thing that I think is noteworthy is that, you know, instead of those invoices going out in July or in the spring, now we need to do it in January, and we need to calculate the amount of the credits right away at the beginning of the calendar year. And the amount of money paid to the service providers, you know, that will have an impact on cash flow at the beginning of the year. But we do have enough cash in the bank to manage that. And so that is the way that would work. And maybe I'll just pause and say or ask if anybody has any question on the revenue side before I move on to the expenses.
Doesn't
what do you
look like
think?
I see any in the chat, and I don't have any questions, Phil. So you wanted to
Okay.
move along?
You bet. So just as a beginning point to continue on, just keep in mind that the proposed total revenue projected for 2026 would be $1,947,000, which is about $50,000 more than we project the revenue to be in through calendar year 2025. So where do we go with the budget? Well, I think overall, there's a lot of things that are very similar. The cost for our accounting software is projected to be a little bit higher. We do expect the audit costs to be a little bit higher than before, but we're also projecting the cost of the 990 tax return for the Recorders Association is going to go down, and that the association is going to assume responsibility for that. You'll see a new category in the expense side, and that would be for the ESS director or whatever title is settled upon. And if you've had a chance to look at some of the preliminary work that we did on estimating the cost of that position, or what we would advertise for, it was kind of a high end of $175,000 plus benefits, and so that's what these numbers are based on. You'll see higher numbers in May and October, primarily because there are 3 pay periods during those 2 months. There's no projected expense for the director position in January, February, because we're primarily targeting that position to be filled in the month of March. We'll see how it goes. We would need to be purchasing a computing device for the new director, and so that's built into the budget as an expense in February. Probably would happen in February or March. Then the next line item is the project management role, and basically that is me, and I'm anticipating that my services will end at the end of March, and the only thing that would change that is if maybe somehow a director would not be hired as soon as planned. But right now, the plan is that I will provide my services per the contract through the end of March, and that is what the negotiated amount is. Legal fees from Brick Gentry, we are proposing to the ESS committee to continue that engagement into 2026, and they're proposing to keep their monthly retainer fee the same as it is today. Government relations is related to an agreement approved at the previous ESS meeting for Rafferty and Nick Lane. The actual monthly cost of that will go down compared to 2025 because that cost is now being shared in a little bit different way with the Recorders Association. The human resource expenses, basically the fees that we would be paying to Connectify for their HR services, that is based on the contract and the number of expected employees that we're going to have during that period. I am projecting a modest increase in insurance this year. You'll see if you do the comparison that we actually expended about $45,000, and I am projecting that we have about a $5,000 increase in our insurance costs this year. The next line item is ESS meetings. We may, if we continue our path of being a significant number of members being hybrid, those numbers will be lower. But if everybody showed up for an in-person meeting at current mileage rates, we're estimating about $1,200 a meeting, and that's what's in the budget. You are not seeing a lot of changes when we look at office operations in terms of that monthly expense, but I do have a few things to highlight. First of all, we're projecting that the expense for the office environment where we're currently in will end at the end of March. And so there is going to be a new office space. The team is actively beginning the search for that. Obviously, it's not imminent, but it's something we need to actively plan for. Roughly, we're projecting that cost of that office space is going to go up compared to the current environment. It just depends on how things go, but I know what it costs to run this office, and I would just predict that the expenses are going to increase some. And I'm making no commentary on that. That's just purely an effort to estimate numbers. We are looking at some inflation.
Phil,
Yes.
not to interrupt, but I would just add a comment that back when ESS coordinating committee did ask you to look at comparables, we knew it would cost more elsewhere. So the office space, what we previously looked at. So
Yeah.
I think that's great that we upped it because, I mean, just to take you out of it, when we independently looked, we knew it would be more as well.
Yeah. And I think you'll know that, you'll have hard numbers to look at, but for budgeting purposes, we need to kind of make a realistic projection, and that's what we did. Going down the line, there's a modest increase in projected cost for telephone expenses. In case anybody's forgotten, there is no separate integrated telephone system in our office. The ILR employees, are all using VoIP phones that can just be picked up and moved. But I do anticipate there may be some inflationary increases going forward into the next year. In fact, I think most of the increase is really associated with the fact that we would need to get a new phone for the director. So that's the main cause of that. Moving forward, there are some things that I pay for right now that in a future situation, aside from the lease cost, you're going to have to account for office cleaning expense and actually paying the utilities. Common area expenses are another thing that will be a part of the equation. I don't want to go overboard with that, but that is a typical part of a lease where, if you're leasing space, you're paying a base lease rate plus sometimes you refer to that as triple net, where you're paying other expenses as well. So just to be conservative and not underestimate, we've added some costs into there. You'll notice that I believe in the month of April, there's $1,000 listed under office tech support. That mostly has to do with the fact that, when you set up a new office, you're going to have somebody, configure the network or set up the firewall. We don't know exactly what it will be, but you should anticipate some additional tech expenses associated with the move. Otherwise, not a lot of changes in office operations. Then, as we get down into the staff and other activities, starting with the communications coordinator position, we are looking at their current salary and then taking into account, what our actual costs are with the new HR provider. And so we basically have moved those in. Again, May and October are a little bit higher because of the 3 payrolls. And there's a little bit of inflation adjustment in there. But the last time that you or the ESS coordinating committee made an adjustment in salaries or compensation for the staff was in May of last year. So, I think if you get into February or even the May meeting of next year, you can take another look at the budget and see what you'll be able to do. But basically, those numbers are mostly status quo, just adjusted for the new HR provider. Let's see. Under education and outreach, not a lot of change there. The biggest recurring expense are the software for MailChimp, and then also for SurveyMonkey at the end of the calendar year. There are expenses for participation in the PREA conferences. which would be roughly about $2,500 each. And subject to the approval of the ESS Coordinating Committee, it would be my intention to attend the February meeting, but with the expectation that your new director would want to attend as you get into their annual meeting in August. Otherwise, there isn't a lot of change there. I think one thing that doesn't show up that I should make note of is that we, in addition to being a member of PRIA, we have been a member of MISMO, which stands for Mortgage Industry Standards Maintenance Organization. They are an affiliate of the Mortgage Bankers Association. And if you want to talk about technical standards for real estate databases, that's where the real activity is in terms of technical standards. And we have been a part of that for a number of years because we want to keep up with what they're doing. And there actually have been some aspirations to maybe start using some of their technical standards at some point in the future. We're just not in the cards this year, and so we notified MISMO that we were not renewing their membership, that perhaps we should be coming back at some point in time. And they understood, but there is no MISMO membership incorporated within this budget. They keep moving. The numbers for the account manager, the customer service coordinator, the accounting coordinator, kind of the same situation for the communications coordinator. Kind of status quo with a little bit of increase, with the expectation that there were any real compensation adjustments that would occur in either February or May of next year after you've got your feet on the ground with the budget. The same essentially is true for the 3 developer positions, using real numbers to project what the compensation would be for our technical lead and our current senior developer. I am being a little conservative here, not assuming it, but just to use as a benchmark how much you would budget for the 3rd developer position. Obviously, that recruiting will take place, and we'll find out. But a place to start for the budget was basically to look at the senior developer's position and then plug those numbers in, just to give a little bit of room to maneuver, once you get into the actual hiring of that position. These technical positions are not cheap, and we want skilled people in these positions, and I think you would want that for the 3rd developer position as well. Moving on down to external development services, there are 2 main ones here. One is for forward file redaction, which we use, formerly known as CSI, but now it's a unit of Tyler Technologies, the redaction service that we have used for a number of years. The people are the same, and things are working, so I don't have any reason to force a change there. The same for the data center and hosting services. We're holding steady in terms of that projected cost, but we just need to be aware that their expenses are going up, power expenses are going up, VPN licensing, which we secure through them, is going up. So we just don't know when or how much. But we're keeping pretty much status quo in the estimate of costs there, but just be aware that there are some inflationary issues coming up. Under the technical consulting, just to remind you, that would be the continuance of the Keller Wallace contract through March, but I do not expect it to be extended beyond that. Software license maintenance, mostly status quo in most of the categories there, with a little bit of inflation. Myrna and I did have a discussion with AccuShop Prism representatives recently. We do anticipate the costs are going up. I think the big concern there is that AccuShop was recently acquired by another company, and we aren't totally sure, what they're going to do with this particular product. So we're going to be paying very close attention to that. But otherwise, in terms of those standard baseline software packages, we're not proposing to pay for the big ticket items like Prism or GB2 out of the reserve fund. It's incorporated in the budget right up front. So the number that you see, scroll down the bottom left-hand corner of your screen, you can see the number 293,283. That's the same number that you saw on the income side. That's what our projected expenses for the local service providers who are part of an agreement with us. The numbers for bank account analysis and the 3 gateway transaction fees, those are very close to current expenses, so we didn't have a lot of increases there. When you add it all up, the proposed, I want to make sure I'm looking at this, the proposed budget would provide net income of $29,792, which is substantially lower than the net income projected for the end of 2025. And that's because, we've added a couple of human resource expenses and other inflationary expenses back into the budget. Total expenditures projected to be $1,917,000. So I'll stop there and ask if we have any questions about anything in the proposed 2026 budget.
Thank you, Phil. It looks like I believe all the questions in the chat were answered.
Stacy has questions.
Oh, okay.
I will try and speak up. Can you hear me okay?
I'm having difficulty hearing you, but give it a shot and maybe Lisa can help me.
Yes, I can help.
Lisa, maybe you can help. Okay, first of all, I appreciate the conservative proposed budget. I want him to know that for sure. My question is the quote search for a new project manager, as far as is there expenses that ESS coordinating committee need to consider in this coming proposed budget for the search for a new director? I didn't see anything listed, so
yeah.
That was my big question. And then also the other thing is benefits. I know benefits are increasing so much. How do you adjust for that, or how did he come up with a figure for the benefits for this coming 2026? Those are my questions.
I'll do the benefit one first. So typically, for the staff that we have right now, and we just went through a benefit election period. Okay, so the numbers that we have in front of us for the staff are known. Okay, and not really projected to change much. And so if we look ahead into October of 2026, I think there will be more information available about the trend lines and benefits. But the numbers that we have right now are known because we just went through benefit elections and they're not going to change. So at least not for 10 months. So I think we're pretty solid on benefit projections, and any of the numbers you see associated with staff and fully include benefits. So we take everything into account. We do look at the benefit cost structure, and then we add those together. In the case of the director's position, so we know that the upper end of the proposed salary would be $175,000. Okay, what do you project for benefits there? And in those cases where you don't actually have the data to look at, you've got to make an estimate. And I added 20% to the baseline cost in order to cover those benefits so that that would be reflected in the budget. A lot of that is going to have to end up being decided during the interview process and whatever negotiation takes place with anybody that is selected for that position. But I think what we got in the proposed budget is kind of an all-encompassing, have things covered, and you just have to wait and see how things play out. But I don't know how to be more conservative, without just arbitrarily padding a budget item. I think we're can be pretty confident in the staff and the executive director costs given certain assumptions. Then, as far as kind of what I would refer to, maybe your question being about transition or recruitment costs or things like that. I'm glad you asked that question, if I understood it correctly, because most of those types of things would be considered one-time costs. And I will be recommending, in fact, to the ESS Coordinating Committee that they just plan to pay for certain recruitment expenses out of the reserve funds. So not to make that a budgeted thing, but to make it something that you treat as a one-time expenditure. You have the resources in the reserves to cover an expense like that. And that's what I will be recommending. So if you hire a headhunter in the end, and you have to pay the headhunter to help you do the recruitment, you can pay for that out of the reserve fund. If we need to spend a little bit of money to pay for Indeed ads or ads on LinkedIn, those can be paid for out of reserves. Those are not huge expenditures. Even if you needed to buy a plane ticket at a hotel room for a candidate from out of state, you would be able to cover that out of the reserve. So rather than try to estimate what that is, I am going to be recommending that the ESS committee just plan to use the resources they have in the reserve for those expenses, whatever they may be.
Did that get everything, Stacy?
Yes.
Okay.
Thank you.
Yes, thank you, Phil. I appreciate that too. Those were a couple of my questions as well, and how when you did a good job of explaining that. Does anyone else have any questions?
Stacy, did you still have a question on the Rafferty group?
I think he explained it. I was thinking that we were sharing the cost, splitting it down the middle, and I thought it was why did I have 5,000 in my brain?
I would say we are between the association and ESS, that cost is being put down the middle.
I apologize for all these technical difficulties I'm having.
No big deal. If you have questions later, call me. I'll walk through things with you.
Thank you, sweetie. I appreciate that.
And then the other thing that was in the chat, which I think was addressed, was that you're already beginning to look at office space and when you'll need to move. And otherwise, I don't see anything else unless somebody has anything else.
So you have two things on the table: a proposed amendment to the 2025 budget, the proposed 2026 budget, and the recommendation to move resources into those two reserve funds to increase both of those amounts. I would emphasize again that you are sort of the sounding board and the oversight of all things financial, but each of those three items is going to end up in front of the ESS committee for approval as well.
Thank you, Phil. So do we want to vote on these individually or as a whole? Do I have a motion?
I think we should do them separately. So I can
Okay.
go ahead and make a motion for the 2025 budget amendment. I make a
Perfect.
motion to approve that as presented.
Thank you, Stacy. So we have a first by Stacy and a second by, looks like Amy just beat Sherry. Any additional discussion? All right, so all those in favor signify by saying aye.
Aye.
Aye. Opposed, nay. Motion carries. Next up, we have the transfer to reserve funds for our approval. We have a motion to approve.
This is Geraldine. I'll make the motion to approve.
Thank you, Geraldine.
This is Sherry. I can second that.
Thank you, Sherry. So we have a first and a second. Any additional discussion? Hearing none, all those in favor signify by saying aye.
Aye.
Aye. And then, did we hear a nay?
I did not hear one, Mel.
Okay. I'll ask for it anyway. Opposed, nay. All right, motion carries. Next up is the calendar year 2026 budget. I can make that motion to approve. Do we have a second? Looks like Amy is a second. Any additional discussion? Hearing none, all those in, was there anyone? Okay, hearing none,
Geraldine, I just want to know who made the motion.
Me,
Oh,
me,
okay.
Melissa, yep. And then, all those in favor signify by saying aye.
Aye.
Aye. Opposed, nay. All right, motion carries. And then we are to the subcommittee terms of office discussion. I did send you an email, Phil. District 6 made our nominations on October 8th.
Okay. I would just ask for your indulgence because Ann and I were trying to coordinate that. So, there just may have been a mismessage somewhere. So it
Yeah.
looks like I'm uncertain about District 5, but District 6, I understand. And this is not trying to exert any pressure on anybody. It's just to say, informationally, we still have some work to do. And I would just remind everybody that it is the chair of the ESS coordinating committee who makes the actual appointments. So, once she knows that these are the nominations, and the only ones we have to worry about are District 1, 5, and 6 this year, just because of the staggering of the terms, and then and then we'll be good. So as soon as that is known, then those should be taken care of once the end of the calendar year shows up. So thank you. I did add to this a discussion about what the December meeting may include. So we have had some suggestions that, are there some changes in procedure? Should we be doing things a little bit differently? This is a kind of an ongoing conversation that's perfectly normal for either outside parties to kind of ask about or for the subcommittee or even the ESS committee to review. So I provided for you, information about, where this information can be found. I copied a component of the policy and working group that ICRA has set up to review both the 28E agreement and the policies and procedures. And so, the question was raised, do we need to make any changes? And then just for your information, I have incorporated the current policies and procedures section about the finance subcommittee. So just a couple of examples, and not trying to give emphasis to this, just using it as an example. But the appointment process, the whole issue of having a chair of the committee, those kinds of protocols. When this was originally set up, they weren't as prescriptive as what is included in the 28E agreement for the ESS coordinating committee. If there's a desire to have a little bit more formality to it or to do things a little bit differently, perfectly okay to talk about. Another recent example was a question about, do we really need to publish the entire bank statement every month as a part of the packet? Or, could we maybe distribute that to the committee members, but then publish only maybe the first page, or the page that shows the totals? What do we need to do with that? And I think that's a fair question because it is a long document. On the other hand, we sort of opted to include that just out of the spirit of transparency, so that, hey, you want to see it? Here it is. So all of those things are fair discussion items. And since we kind of are at that stage, end of the year, kind of maybe new era beginning in 2026, it's okay to ask those questions. So the intention would be to take a little bit of time in the December meeting, because we won't have as much other work to do to have those conversations. So that's why those things have been included. So we'll bring it up, and I'm going to see what people have to say. So you might give some thought to that in advance, and you might even take some time to talk to each other about it. And then to round out the agenda, the last action item we have is to ask you to look at your calendars and say, would this calendar of meetings be okay for everybody in 2026? We basically tried to follow the pattern that you set for this year. Thursday is a good day. Most of the time, not always in the first week, if you can avoid it, just to allow some time for documents to be prepared. And 9 a.m. seems to be a good time for everybody. So we would welcome your comments on this. And if you don't want to decide now, think about it between now and the December meeting, so we can set the schedule for next year.
Susan, it looks like, says thank you, appreciate all of the explanation. I believe the calendar works for me. I don't know what everyone else's thoughts are. If you've had a chance to look at it, check.
At this point, the calendar works for me too, Sherry.
Agree. This is Stacy. I agree.
Does anyone have any objections with the calendar or would prefer to defer? Otherwise, I think we could probably approve it.
This is Stacy. I can make a motion to approve.
Okay. Thank you, Stacy.
Geraldine, I'll second.
Second by Geraldine. Thank you. Any additional discussion? All right, all those in favor signify by saying aye.
Aye.
Aye. And then nay for oppose. All right, motion carries. Looks like next, oh,
Go
go
ahead.
ahead, Phil. I was
No,
just gonna say, it looks like our next meeting is gonna be December 4th at 9 a.m.
I know it may seem too soon to say this, but I'm going to do it anyway. Happy Thanksgiving, everybody.
Thank
Thanks,
you. Happy
everybody.
Thanksgiving.
Happy Thanksgiving.
Thank you, Mel, for stepping in.
You're welcome. Anytime.
Happy Thanksgiving, all.
Goodbye, everyone. Thank you.
Yeah, for her passed away husband.